But let's focus in on the evolving themes for the markets and some favorable avenues for investment as well. Radhika Gupta is Managing Director, CEO at Edelweiss AMC, and now joins in on the show to discuss that as well as lots more. Radhika, good morning. So much to chat about. Why don't we start off by just talking a little bit about what's going on with the bond yields as well as the dollar flow and those implications for fund flows into emerging markets, in particular for India. What do you reckon is likely to be the course of action now?
So I think bond yields have, of course, had a tricky month of February around the world, but we do believe that March will bring some stability into bond yields globally, and we're seeing signs of that in India. I think medium term, though, our belief is that with COVID and the vaccine-related recovery happening, and a weaker dollar, this will bode well for emerging market flows, and that just doesn't mean India-specific flows. So it will bode well for emerging market flows. A combination of improved macros and a weaker dollar generally bodes well for emerging market flows, and that continues to be our belief.
Okay, fair enough. Give us a sense as well as to where you're seeing wealth creation emerge. I mean, let's keep it specific and talk a little bit about the consumption sector. Just a short while ago, we were having an interesting discussion talking about how, as the vaccine, progresses, we will see a definite pick up in the overall consumption, because there has been a major, FOMO feeling that has taken place. As the consumption sector continues to progress, there's also that worry about the overall food and agri-inflation rearing its ugly head. So how does one look to play the consumption theme?
In fact, we do think consumption is one of the more underrated themes. I think there's been a lot of talk about themes like technology and healthcare, and we are actually launching on the AIF platform a consumption-related fund later, in this quarter. But we do think consumption is one of the themes that will come back. If you look at even the earnings trajectory, while Q2 was sort of improved earnings trajectory on account of margins, I think in Q3 you are seeing volume expansion across various consumer companies reporting reasonably strong numbers. And while I take your point that there is some worry about headline inflation and potentially input price cost, consumption has not been a driver of this recovery, and it has to come back as the economy opens up, and hopefully now that there's no second wave of COVID.
Sure. Radhika, since you are looking at the emerging market cluster per se, and there are companies outside India's listed universe as well, wanted to understand where within consumption outside of India are you scouting for opportunities already invested in?
So I think for us, because we look and offer themes outside of India, obviously emerging market consumption continues to be the biggest play. China would be the most significant play in terms of consumption. Recall that from a consumer point of view, China, accounts for, between China and Taiwan, now 50% of the emerging market index. So outside of India, it's really your biggest play. And it's also the first economy that is coming out of COVID wholeheartedly. So we look at China as possibly the biggest opportunity in consumption after India. And within China, for instance, in our Greater China Fund, there are consumption themes that are on the borderline of consumption and healthcare. So you'll have a company like Wuxi Biologics, which is a diagnostics play, or you'll have a hospital and eye play. You'll have a hotels play or a frozen foods play. But net, I think consumption continues to be very, very strong from a China point of view. So if there's one market that we're looking at outside of India, it would be China and Taiwan.
Sure. And within financials, I see that HDFC Bank still makes the cut to your list. No new additions from NBFCs, etc.
So for us, I think, we had a period in our domestic funds where we were significantly underweight financials. And then, I think middle into last year, we started being neutral and finally overweight financials. And what we are seeing, our focus has been very much private banking. I think that continues to be our focus. NBFCs has been very, very select. So the large part of the portfolio continues to be private banking. And I think what's giving us, optimism this quarter is some of the bad bad news around the banking sector is also out of the woods. And I think headline earnings, including I don't want to be stock specific, including for most of the private sector bank majors, have come in as a positive.
Radhika, what about tech? Let's talk about that a little bit more. The kind of opportunity you also see in some of the Indian tech companies. Got a slew of IPOs also that are going to come up, and I mean tech in the non-conventional digital sense or the e-commerce sense more than the IT heavyweights. Given some of your holdings in offshore tech names, what's the outlook looking like there?
So I think tech, one, as you rightly said, tech is no longer the old school IT services as we saw it, the 4-5 big listed companies. I think tech is a theme that transcends across industries. I mean, tech is a theme that's disrupting everything from entertainment to financial services and autos. Globally, what we see, and we run probably the largest offshore tech fund out of India, is that even though tech has done significantly well, on an earnings growth basis, tech continues to, smash earnings in the rest of the benchmark companies. So globally, US tech companies are seeing earnings growth of 34% over the last year versus 7% for the benchmark. And even their forward EPS is significantly higher than the rest of the S&P 500. And we're seeing tech themes across a spectrum of spaces. So it's not just the traditional FANG stories that you're going to see. Even in the Indian context, you'll see AI-related themes. So globally, you'll see companies that are providing AI information to credit card companies and banks. You'll see themes around gaming. In fact, that's a theme you may see in India with some listing coming up in that space. You'll see growth in healthcare technology. So these are 3-4 spaces. I think the conventional tech, which was internet and hardware, has given way to a very new kind of tech. And we also do see a robust IPO market from an Indian context. It's just that less tech companies will be listed in India than they are overseas. I think the overseas range of tech from an investment option point of view is much wider than what is available in India.
Okay, what about in terms of the risk return ratio currently? Where do you feel we're at when it comes to the kind of return potential that we're seeing given the momentum that's already been in play over the last several months?
So I think investors will, and this is not a popular thing, will have to have moderate expectations from equities. I think the problem is ending a financial year like 2021 where equities have done what they have done, you will have to your expectations from equities going forward. I think we've been saying since November that not having equities is a risk. Being underweight on equities is a risk. We'll put out a note. We do think within equities, however, your wealth creation upside probably is more favorable towards broader markets because they have trailed significantly, and we're seeing some signs of that reversion happening. So I think on the equity side, the story lies in broader markets for us. On the fixed income side, I think there is interesting opportunity for long-term investors because of the way bond yields have moved. So bond yields are up 1%, over the last couple of weeks in an unexpected move. And if you're now looking to lock in money in PSU, STL bonds, I think in the 5 to 7 year end of the yield curve, you're actually seeing a very, very interesting wealth creation opportunity where you could probably realize 5.7 to 6% post-tax.
Radhika, apart from factors such as strong corporate governance and looking at high return ratios, what would be sort of the checklist for investing in companies within the emerging markets that would catch your eye?
So I think within emerging markets, when we look at our funds, when we look at our China funds, when we look at our emerging markets funds, the theme is really looking at growth-oriented companies. It's also looking at companies that are going to be beyond the traditional ROE and management metrics, a beneficiary and have tailwinds from the COVID crisis. So that's why a lot of the portfolios today are very, very heavy on their tilt to technology. They're very, very heavy on their tilt to online e-commerce companies, but it's companies that have significant tailwinds out of COVID. I think Harshad uses the Nassim Taleb framework of anti-fragility, and you're really looking at companies that are robust in this kind of period.
Radhika, what a pleasure it has been chatting with you. Thank you so much for giving us a glimpse as to what the investment strategy is, the kind of sectors and themes that present themselves as strong opportunities as well within emerging markets. All right, that's the take coming in, but let's also focus in on what's going on within the markets and